Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two unanimous strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that have all buy ratings from Wall Street analysts and price targets that would imply some pretty attractive double-digit upside potential. So we're going to take a look at these two companies, what it is that they do, and what those Wall Street analysts are predicting for the stock's future. We found today's stocks using the TipRanks stock screener. This is found right under Research Tools, and we put in several different filters here to narrow down our list, focusing on medium to mega cap market caps. I wanted at least a neutral or outperform rating on the SMART score, a strong buy consensus, of course, and some upside potential of over 20%, narrowing down our list below. Just before we get into today's companies, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into our two unanimous strong buy stocks. First on our list today is the TCOM group, and this is a stock that we've covered before, most recently back in March. They trade under the ticker TCOM, currently priced just above $47 per share. In the last year, they've climbed 23.5% and gained over 11% in the last 6 months, but in the last 3 months, they've cooled down a bit, dropping about 8.5%. You may have noticed that this is a sponsored ADR or American Depository Receipt, as the company is based out of Shanghai, China. They provide online travel-related services. Founded back in 1999, this multinational travel agency provides a variety of travel-related services, including airline tickets, hotels, package tours, and corporate travel. They're one of the largest online travel agencies in the world, with over 400 million users worldwide. Their vision is to be the world's leading and most trusted online travel brand. They just shared their second quarter and first half of the year results last week on August 26th. They did see strong growth across the board, coming out with both an earnings and revenue beat. For their Q2, they reported earnings per share of $1.02, beating expectations by 25 cents per share. Net revenue for the quarter came in at about $535 million, growing 14% year over year. They said that accommodation bookings by their Chinese sites grew approximately 20% year over year, primarily driven by robust growth in both outbound and domestic travel, with outbound hotel and air reservations recovering to pre-COVID levels. A 4-star analyst from Morgan Stanley recently weighed in on the stock, rating it a buy based on anticipated growth in revenue and improving operating profit margins. He predicts revenue increases of 16% and 15% year over year for the second and third quarters and expects operating profits to rise quarter over quarter in both periods. Trip.com currently has 13 analyst ratings, all coming in with unanimous buys. And the average price target comes in at $68.90, implying an upside potential of 45% from current prices. Looking at those analyst ratings down below, on the low end we have a price target here at $56 for an upside of 18.5%, while our high-end price target is the $76 from Barclays with an upside of over 60%. For our second unanimous strong buy stock, we're taking a look at Barrick Gold. This is another one that we have covered in the past. I believe it was back in November most recently. Trading under the ticker GOLD, it is currently priced at $19.30 and has grown over 23% in the past year, and in the last 3 months has climbed nearly 16%. Barrick Gold is a mining company engaged in the production and sale of both gold and copper. As a sector-leading producer, their portfolio spans the world's most prolific gold and copper districts and is focused on high-margin, long-life assets. They operate on 4 continents in 18 different countries, and in 2023 produced 4.05 million ounces of gold and 420 million pounds of copper. They shared their second quarter earnings report back on August 12th, where they did come out with both an earnings and revenue beat and reaffirmed their fiscal year guidance. For their second quarter, they reported earnings per share of 32 cents, beating estimates by 5 cents per share, and reported revenue of $3.19 billion, beating estimates by about $300 million. The company said they're positioned to deliver on their gold production guidance for the year and anticipate higher production and lower costs in the second half. They also announced their latest dividend and commenced some share buybacks. And just last week, we did have a 5-star analyst from Argus Research upgrade their rating on the Barrick Gold stock to a buy. He said that the company is a major producer of gold with a long history as an industry leader and also possesses a clean balance sheet. Given global economic uncertainty, gold is likely to remain in demand. And Argus added that it's also impressed with the company's decision to run the business for the long term, focusing on replenishing and replacing gold reserves rather than buying them at a premium. And just yesterday, an analyst from Bank of America increased their price target on the stock. They cite a bullish gold price view, calling for it to reach $3,000 per ounce by sometime in 2025. They bumped up their price target 25% to $25. The Barrick Gold stock has 9 current analyst ratings, all coming in with unanimous buys. And the average price target comes in at about $24.60, implying an upside potential of 27.6% from current prices. Looking at those ratings down below, we can see several analysts have been increasing their price targets recently. On the low end, we do have this $23 price target for an upside of over 19%, while our high-end price target comes in at $28 for an upside of over 45%. So that is a quick look at 2 stocks having all buy ratings from Wall Street analysts with some pretty attractive price targets. Let me know your thoughts on these companies and whether you agree with those analysts or not. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.